All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for October 20th, 2020. Let's see what we've got here. All right. So yesterday we had the slight gap up, but then a harsh sell-off that took it all the way through the Dragon and then almost through the PSAR. And so there had real concern that another day like that, a move of that size would take us back down through the Bollinger Band mean and put the entire last 15 days of gains at risk. But we also said this could also be a critical state from which we could see a move up. So big move up, big move down, and we also considered the possibility of a sideways grinding move because of the approaching election, where you don't get the directional moves anymore, but you just get the staggering into the election, as it were. So that made yesterday's close leave us right in a perfect critical state right in here. Maximum uncertainty and ready to break in any direction. All right, and what we got was one brief move north, followed by continued harsh selling in the afternoon to bring it right back to where it started from. So when you take this all off, that's what we get. From out of this, out of that zone there, we get a slight. Let's see if I get this. Yeah. So a slight gap up, a move back up through the edge of the Dragon, the spine of the Dragon, almost, and past Z1, and then almost up to the tip of the Dragon, but then a sell-off to give back everything that was gained. And the net over net was not much change, but the first impulse was up, and there wasn't much new selling pressure. It's just there was an unwillingness to hold it beyond the tactical gains of this first move up. So as we get one step closer to the election, the PSAR just moves up one notch. So tomorrow the PSAR value should be is over here at 343. Today's PSAR was 341 3/4. We got tomorrow, it'll be the lower skin, the spine, and the higher skin of the Dragon. And because the Dragon is starting to roll over, that becomes like a new Dragon peak. The previous one was from the last hump of the Dragon. So if we look back at that, we'd see that, this peak right here is slightly higher than this surge, in the same way that this peak RL10 is higher than that peak RL10. So it's just running out of a little bit running out of enthusiasm here, So that's the two Dragon peak price levels that we're looking at. The current one at, call it 348, and then the last one at 350.4. So the case to the upside, well, it's got to get through those three levels. The lower skin of the Dragon, Z1, spine of the Dragon, upper limit of the Dragon, which is also the Dragon peak. Then hump of the baby Dragon, or the baby Dragon here, and then peak RL10, and then Z2. And then the 10-day high and 30-day high up here is still around 354. The downside for me just feels easier to believe in. It's resting right on the PSAR already. And now the difference from the RL10 and the PSAR is not much. It's less than a 1 ATR. So that could very easily spell the end of this little move that took us back to 354. Because when that RL10 crosses the PSAR, then we get a PSAR flip, and then the trend is definitely down. And you can see it's already, we've got about 7 days of basically downward pressure already. So if tomorrow's PSAR fails, then there's not much support anywhere in here until we get all the way back down to the 10-day low. Today's 10-day low was here, but just recognize that 10-day low is going to move up tomorrow. When you take into account the time frame, this is going to be the new 10-day low here. So we will start off the day tomorrow in an oversold condition. And so if that breaks, call that probably 341. So if that breaks 341, then we're at a 5% sell-off from the swing high. And then the next stop is the Bollinger Band mean, 337 3/4. And then Z1, long-term fair value, and down to Z2. So lots of targets on the downside. Easy to see how that could happen. All right, let's take a look at what worked today. Yeah, so I'm setting this up, in summary, I would say this is another critical state, ready for sharp, big moves in either direction. I've got no swing preferences or biases in either direction. I'm truly treating this as short-term trading opportunities and taking the bird in the hand rather than waiting for two in the bush. Nevertheless, did have some gains today, net over net. S&P at plus 0.4. We've got the Russell at 0.2. Diamonds at 1/3, 0.33, and then Treasuries down 1%, slipped below 160 again. The fact that Treasuries can't get any traction remains a mystery to me. Fortunately, I'm not a detective. I don't need to know why, but it still seems kind of odd. So the things that underperformed the S&P, the sectors, let's look at those. So tech underperformed at positive 0.34. There's materials at 0.23. Healthcare, 0.13. Japan flat along with volatility. And then the companies that underperformed. Starting with the worst. So we've got Intel -2, Tesla -2%. U.S. Steel finally gave back at -1.78. Nucor and Cliff. So now you can see we've got all of the, the metals in the basic materials. So here's basic materials plus 0.23, but now our metals with Cliff -0.9, Nucor Steel -0.94. U.S. Steel 1.78. Let's see. Microsoft underperformed, Amazon, Salesforce, Procter. Still a pretty good day for Procter, just continuing to grind it out. Now, on an up day in the market, let's see the sectors that worked. So we got wheat and precious metals at 0.64. Let's just mark the triple Qs while we're here. The TQQ 0.65. Where is our TECL? There it is. The triple broad tech sector 0.92. So that's beating the NASDAQ Focus large cap techs. So we got Bill Ackman's hedge fund here at 0.66. The FANGs, finance and consumer discretionary between 0.7 and 0.8. We got commercial real estate here, 0.86. Caterpillar continues to look good there. Emerging markets and energy, 1.1. Clean energy, 1.6, along with oil at 1.6, and Brazil, 1.7. Silver, 2%. Oil exploration, 2.1, and Mexico, 2.4. We've been pimping Mexico as a kind of a stealth swing. Now the companies that worked, the Frog Champion win, almost 4%. Google, 1.4. Alcoa was the only metal that bucked the trend. That's at 1.3. Apple, Nikola, Twitter from Techland, 1.3. Goldman and Devon Energy, 1.1. So a relatively broad set of non-U.S. choices there, and some focus sectors like that clean energy. I just think that's still good to go. Yeah, clean energy is looking really good here. Very positive. Caterpillar had a good day again. That's pretty good. Apple's trying to buck the trend. It's holding right at the Bollinger Band mean and the bottom of the dragon. But this pullback of the last 5 days has caused the RL10 to roll over. So this is actually a very good place to start picking them up on a value play, like right there. I think that's what I would look in Apple. I actually like Apple at like 118. Break out to the upside, that would be very favorable. And this whole, this previous zone that we looked at as a yellow zone. If we just extended that over, if it holds here and now starts taking off, well, then what we're really hoping is to see a move like that up to like 135. And I think that, so there was the first urge to buy. It couldn't hold, and then that's 5 days of, it's held the line. I mean, the dragon has really supported it. The Bollinger Band mean has supported it. So as long as, if it can move out from here, I think that's a buy. That's a nice rebound. So that's Apple. Another continuation play, Procter & Gamble. Still fighting to get traction in here. We identified this as when winter became spring, became summer. We liked it in here. It's had 2 really tricky days. So this was a nice move here, but then harsh sell, and then today was a big gap up, but it couldn't hold. So that's 2 problematic days in a row. But again, if it can leave this behind, like right in here, that to me is kind of a really nice critical state. I'd be buying that support at the PSAR. So if it can break out, I'm long at 142.5 with a belief that it gets to here pretty quick. And then we'll find out if it has more legs. You'd like to see another leg like this. Pause. Resume. So I really like Procter. All right, back to our regularly scheduled programs. All right, I want to take a look at a couple trades. We've been hitting Kata 2 and Kata 3. Kata 2 is that second leg up, supported summer or supported fall crossing. On the downside, it's Kata 3. That's the collapsing dragon or supported winter crossing. So here's one where I kind of like get a Z3 breakdown. Can I get a Z3 break? Those are 3 short positions. Let's see, probably a breakout above the VWAP. Maybe the Z3, maybe the next Z3, something like that. Treating this like a yellow, about a yellow zone in here. So on your little score sheet there, where would you get long? 1, 2, or 3, and where would you get short? 4, 5, or 6? So if we're playing this as a breakout from a Z3 pinch, the argument for one is that if it holds support here at the bottom of the channel and it crosses the VWAP, then instead of waiting for the Z3 pinch to break out, you're picking up 10 cents worth of price improvement in here, and then use 4 as the stop. Right. So mark your little strategy up there. I kind of like I'm noticing the RL270 right there. And I'm noticing, see, the Bollinger Band mean looks like this. Okay, so place your bets. Let's see what we get. I personally like that one. The Z3 breakout. I could live with this one as well. Now what I'm noticing, is this little pattern here. So we have a strong up, a pullback, and then a resumption. So I really like that. And this is a case where you could say, let's say you picked one or the other of these, but you don't have two, if you had gone long at 2 and your stop may have been at stop is 0, I could argue you could put that here just below the VWAP, or you could just pick the in the usual way, just pick the yeah, that'll work. I mean, that's only 10 cents from Z3 to Z3. So now you see this pattern here in the blue circle, and a couple things are in your mind. You're seeing this. It was a strong move up, a pullback, and then a resumption, and it's almost ready to take out that previous high. Okay. So while you're thinking maybe some kind of second entry up in here, you've got to contend with this. Let me draw that bigger. Come on. So now we have like 2 dots above our entry. So we're not quite ready for the Wu Wei exit yet. Although, if you were ever going to front run the Wu Wei exit, this might be the time that you could move that to here, because it's already made a swing low and started to move out already. And you're already thinking about where I can put my second entry in here. So if I'm going to do that, why not move that stop right now up into here? So if you move that stop to there, now you've achieved your no lose plus dinner for 2 already, and now you can have a little bit of calm while you're waiting to decide where to put this second entry. So let's suppose that you have this position and you're long from 2, and your risk was here, and you're at no lose plus dinner for 2. So here's a nice problem to have. Where am I going to put my my next entry? I could, and my choices are, I could do it right now. I could wait for it to break out above this high right there. Or I could wait for it to make a new Z3 high. So lock in your idea right now. Do you get your second position in right now, just on the basis of what you see already? So do you add the second position now? Do you wait for it to break above the peak of the 2 right there, above the high of the day? Or do you wait for 3, the Z3 breakout, so that it will have really cleared level 2? Realizing that the difference between those is as much as your initial, basically as much as your initial risk was down here. So the point there is the longer you wait for certainty, you're given back measured moves, right? So go ahead and lock in your idea. We'll see what happens here. So no matter which one of those you picked, you could have said no second position, no. You could either gotten one here, you'd have gotten this one here, or a pullback, and even here. Of course, the one I didn't show, 2 is really nice. Like, if you didn't get 1 or 2, but you saw this pullback and then a resumption, this next crossing, that's another kata 2. So I would take any entry in there. I think there was, Lisa picked a break above 2, so I'm going to say, Lisa, you probably got that. You probably got that entry there. All right, so now here we are. We've got this little, come on. Yeah, we had this little pullback. It held. It resumed, made a new high, and pulled back. So now we've got, we had our entry right here, I'll say. Our second entry is like right here. So we are temporarily in the money on the second position. So now the question is, where do I want to move my stop? So I'm already back into the Wu Wei exit already. So if I'm here, so if I just go to here, now the question is, do I just pick up the Bollinger Band mean exit? Looks like that. Or do I pick up the and lock in one more piece using the PSAR and get snug up in there? And that way, let's call this one decision 1. You just stay with the Bollinger Band mean. Decision 2, you decide to move it up to the PSAR dot and then hold that in place. So it's like a modified Wu Wei. So make your decision there about where you would put your stop. And either one of those actually, locks in some gains. Certainly on number 1. The decision to lock in at 2 makes the second position in the money. If you stay with the Bollinger Band mean, entry number 2 is still a little bit under. So I would say I like the PSAR dot myself. Anytime I can get even a little bit of risk out of that, I like it. Feeling good. So now the question is, do I want to keep pulling this up to the PSAR dot, or do I adopt the Bollinger Band mean? So I'm going to leave that kind of like right there. And you see how this is kind of this little sliding scale? I'm going to say the PSAR dot is number 1, and the Bollinger Band mean is 2. Okay. You could almost be thinking about is there a third entry in here somewhere? So decision 1 would be to add a third position right away. Decision 2 would be to add it if it breaks above that current Z3 excursion. And decision 3 would be up here. Or decision 4 would be just stand pat with 2. Right. So let's say that we've at least adopted this and possibly this. So make your decision. Lisa is going with a third position at 2. So let's see what we get. Lisa gets her third position in. It immediately reverses back to the skin of the dragon. So now, Lisa, I'm going to ask you where you put your stop. Do you keep your, and here's the PSAR dot. Sorry. Hit the wrong button. My bad. What do you like, PSAR dot or the Bollinger Band main? I think she says the PSAR dot, so let's see what we get. All right, if you take the PSAR dot, you end up getting an exit here. If you're holding the Bollinger Band mean with half a position, then you're still in. Now, Lisa, if you took that exit at the red dot, you're all out with a nice gain. What happened here is that third position basically eliminated the second position, but you've got a really nice gain on 1. So now the question is, if you got all out, would you get back in here, say at 2 or 1? I'm going to say you probably got in. Now, right about here, so if you're in right here, now we are 3 or 4 dots above the Wu Wei, above the entry. So if our stop was like here, we could now be right about here, and our stop is locked in. So we're actually in the money. And then we probably end up getting out here at the Bollinger Band mean. So if we use the managerial exit, then I want you to notice, we get this, and then out here. And this is a case where, again, the managerial exit is not all that bad. That Wu-Wei exit, not bad at all. Because if we were doing the true Wu-Wei and we take half the position at the PSAR and then put that half a position back on here, then we turn that into a really nice trade when we get the final exit up in here. So that's not a bad trade. All right. So this is what I'm highlighting here then is this is our Z3P. This is our Z3P pinch breakout. We did a structured trade where it could go either direction, and we got enough of a move that we could actually get three positions in the Wu-Wei exit all the way up, protected us pretty well and allowed us to lock in the gains. And we certainly like that because it comes all the way back to the VWAP. And so that entire trade basically there's the opportunity to make some hay. Here's our Z, and now notice the Z3 pinch. So now I want you to notice if you just played the Z3 pinch coming out of this thing, you probably got short, probably scratched, got short again on the winter crossing, and then made this nice bank. You probably got this trade. If you trade that in the usual way, you get this one, you get a scratch, you get this nice move here, and now you're able to be very directional and just responding to the flow of that market. Yeah, Lisa, you could design that as a rule set. I mean, you can make it as complex as you want. Now, the trade that I really like on this one is this one, because I want you to see the you have a swing high. Oops, sorry. So you have a swing high here in the dragon. You have a low. You have a lower high, right? So that gives you our little 1, 2, 3, and here's your pocket entry. Sorry. So this is your pocket entry short here, and then this would be a collapsing dragon short right about here. Either one of those entries is acceptable. Okay. So this is kata 2, where you have a high, a low, a lower high, and then a pocket entry short, or you wait for the collapsing dragon, and then you have either the sniper or the Wu-Wei exit here. Okay. Support at the VWAP. Bollinger Band mean, or the PSAR. So when you're seeing this, all of this price movement holding above the VWAP and it comes back down to the VWAP, then gives you this move up, bang. And notice you got the, you have this pinch right here on the Z3s, and then that expanding move. This is the train leaving the station on the next round. This was leg one. Notice here's a high, a low, and then a breakout above the VWAP, bang. And then here's the next leg up, second leg up. This leg is the same size as that leg. Here's Mexico, the frog champion. $0.10 move right out of the gate. Breaks above yesterday's VWAP. You will not lose money on that trade. Sorry, here's your sniper exit. Maybe that might have been your manager exit, or this one might have been. Supported summer crossing. If that little pullback got you out, you're just too nervous to trade. That's like 2 cents. Here's another grind. And the point is that you never know which one of these is going to work. But man, you get this nice oscillation here. You get this one. You certainly get that one. That's what an orderly intraday frog champion looks like. Okay. Harsh winter, supported spring crossing. This scratch may have gotten you out, but you'll notice that if you're using the Wu Wei exit, it doesn't get you out. But if it did get you out, then this should get you back in. And then you get this trade. And then you get another supported spring crossing here, and either this one or that one gets you out. And not even talking about the collapsing dragon here. So you could live with that trade. You could live with that trade series. Here's kata number 2 on the short side, right? A peak, RL10, a low, a lower high, and now